Hello, my name's Dan Osman. I'm the Head of Later Life Lending at UK Moneyman. This is the first of a series of videos that we've made to help clarify the process of taking out a lifetime mortgage or any other later life lending. At UK Moneyman, we are specialists in looking at your position holistically. So myself and my colleagues who your appointment may be with, we're all qualified in normal mortgages and specifically in later life products. What this means is that we can look at your situation with a totally open mind, look at the objectives that you want to achieve, how much you can afford, and make a recommendation based on that, not one that starts off with maybe the idea that equity release is what you need before we've even found out who you are. So when you book in with one of us, the first process is an initial chat. Now, the idea of this is so that we can answer any questions that you might have. We can talk to you about fees and charges, what to expect through the process, and so that you can get to know us, because it's really important with later life borrowing that you feel that you can trust the advisor that you're speaking to and that you're comfortable disclosing sometimes some really personal information with them. Now, from the initial chat, and this may take part in the same phone call, or if you'd like a bit of time in between, if you'd like to arrange for some support from a family member, that's absolutely fine. We can make the next appointment to suit you. But the next stage on is the fact find. Now, the fact find, as the name suggests, is about us finding out a lot of information about you. The more information you can give us, the better our advice will be at the end of the day. So what we'll ask you about is we'll ask you about your income and your outgoings. We'll ask you about any assets that you've got, including other properties in the background, savings, pension pots, things like that. We'll also ask you about any credit commitments. So it's worth having those to hand. Any existing mortgage that you're looking to pay off, any finance agreements, and anything else that you've got going out on a regular basis. We'll also talk to you about your family, particularly when you're taking out something like a lifetime mortgage. It can impact on the inheritance that you can leave behind to family. So we'll want to know whether you've had a conversation with them about that, how you feel about that, and whether there's something that we can do to put in place to lessen that impact if that's a priority for you. We'll also talk to you about your health. Now, one of the main reasons that we'll do this is that there are lenders out there who look at medical underwriting and can give you beneficial terms if your life expectancy might not be as long as a healthier person of the same age. So that's really important to look at as well. We'll look at your wills, power of attorney. Now, power of attorney and wills aren't an obligatory thing for taking out a lifetime mortgage, but they're a really good idea. We're talking here about a mortgage that lasts for the rest of your life. So at some point, it's likely to need repaying by the sale of the property. Now, if that's after your death, it will be the executors in your will that do this. If it's because you're going into long-term care, then it would be you who's doing it, or if you've lost capacity, if you're not able to manage your own financial affairs, then the ideal situation is that you've appointed a power of attorney, which is someone that you can trust to make the decisions that you would make yourself if you could. So we'll look at all of that stuff. We'll point you in the right direction to get that arranged if you haven't got it. Or please, if you've got a solicitor that you know and trust, go to them and have a chat with them about it. They'll tell you something very similar, and hopefully with all of that in place, it'll mean that any eventuality that comes up later on can be dealt with. After the fact find, your advisor will have gathered enough information to go out and research the market and to make a recommendation to you. Now, that recommendation takes the form mainly of an illustration from a lender. Now, if we talk about lifetime mortgages for the time being, the illustration is in the same format from whichever lender the recommendation comes from. So the sections are split up exactly the same, and they're designed to allow you to compare illustrations from two different providers side by side and get a good idea which is going to offer you the best value or which is going to be the most suitable for you. So your advisor will go through this illustration with you step by step, but it's just worth thinking about a couple of the points in it that you can have a look at before, which might trigger questions that you want to ask to your advisor and give you something to think about before your next appointment. So the start of the illustration talks about what a lifetime mortgage is. It makes it clear that this is the product that we are recommending for you given what you've told us. It'll reiterate your ages and the assumed value of your property, how much you're borrowing, whether that's as a lump sum or as a lump sum with a drawdown facility in the background. It will confirm the interest rate and the fact that the interest rate is fixed for life, and whether there's any discount applied to that for servicing the interest. If you've selected to service the interest, it will have a figure there that confirms the monthly amount as well. If you've elected to service the interest on an ad hoc basis, which basically puts the control in your hands, it won't have a figure for a monthly payment or anything like that, because you determine when you pay that interest off. Now, your advisor can talk with you about setting up a standing order for that, or making regular payments if that's something that you want to do. Now, there are two really important tables in the illustration. One of them shows you the way that the interest accrues over time if you don't make any payments. Now, this always shows the worst case, so it always shows the full amount of interest adding on to the loan and compounding. So compounding means that the interest adds on each month and the amount increases, and ultimately you end up paying interest on interest that's already been added on. So the figures in that table will show the amount of interest you pay each year increasing over time. Now this is a table that often frightens people quite a lot. And really it's designed to give you an honest picture of the outcome over maybe the next 20 years if you don't pay any interest. Talk to your advisor about it, go through the options, have a look, because with most lifetime mortgages you aren't committed to paying the full interest. You can pay no interest, you can pay £50 a month. You know, we can tailor it to what you need, and any payment that you make can help to reduce that compound interest. The second table shows you what the penalties are for paying the mortgage off early. Now, just to be clear, if you sell the property through after your death, or if you've gone into long-term care, then there's no penalties apply there. If you borrow as a couple and one of you dies, then there is a period where penalties are waived to allow for you to downsize. With a lot of lenders, they have a downsizing repayment charge exemption. Now, that varies a lot from lender to lender. It is detailed in the application beyond the, in the illustration beyond the penalty section, but really important for you to talk that through with your advisor and make sure that the lender's particular approach to that is best suited for your plans if you think you might downsize in the next sort of 5 or 10 years. The other sections in the illustration show the risk warnings. They show your obligations under the lifetime mortgage. They give you an idea of what might happen if your property goes up or down in value. Limited use that, but it does give you an idea. And it also details the route for any complaints that you want to make and the amount of commission that a lender will pay your advice firm. It's a good idea to have a look at the illustration and familiarise yourself with it, but at your next call with your advisor, he or she will go through the illustration step by step and make sure that you're comfortable with all the elements of it, answer any questions that you might have. It's not the end of the process there. If you've had a look at that and you decide that this is not the right thing for you, we can always look at an alternative product. This is a collaborative process, so this is us and you trying to find the best thing for you together. And you're now ready to submit an application. Okay, so to submit an application, your advisor will ask you to send us in some documents. Now, some of those are very standard, as you would expect. They're to prove your ID, to prove your address. Like everyone else in financial services, we have to work within the anti-money laundering guidelines, and for that we need to prove that you are who you say you are and you live where you say you do. So those are the most basic. The other things that we might ask you for are 3 months bank statements. Now, with that, although you're not committed to making payments with lifetime mortgages, it's important that we check your income and outgoings against what's shown on your bank statement. Part of the reason for this is that we try to identify if someone is financially vulnerable, and bank statements can be a really good indicator of that. And what the view that we've taken is that we will ask for them in each and every case. And sometimes it will identify something that's helpful to you. Sometimes it will identify something that we need to be aware of as your advisors. The other thing we'll ask for is proof of income. So this generally takes the form of pension award letters, maybe benefits if you're receiving personal independence payment or attendance allowance. All of those things can be taken into account, particularly if we're using an interest serviced mortgage, so that we can make sure that affordability is going to be met for you all the time. If it's a remortgage, we'll ask for your home insurance because the lender will always want to see that from us. And we may ask for power of attorney documents if we think we might need to use those as part of the process. Now, once the application has gone into the lender, the valuation should be instructed very quickly. Now, the valuer will often come out within a week. They won't necessarily be there very long. 15 or 20 minutes seems to be about the average that a lifetime mortgage valuer is at the home. In terms of what they're looking for, so they're not looking for home and gardens. They don't want a show home. But one of the most common issues that comes back is about clutter. Now, this is always a really difficult conversation to have with people because they associate it with hoarding. And sometimes, valuers go out and find genuine hoarding. But they want to be able to get into every room. They want to be able to see the skirting boards. They want to be able to see the ceiling and the walls. So if your home is very full of possessions, it might be worth just getting those in a bit more order so that the valuer can get around the house freely. As I say, this is not about a standard level of possessions. This is about a house that is overly full of stuff. So that's quite often an issue. And sometimes a valuer will come back having identified damp and things like that. It's not the end of the world. Okay, so if they've identified damp, it might be something that you would want to address for yourself anyway. The lender might ask for a specialist report from a damp and timber engineer. We can help you source that, and it will be taken into account with the offer that the lender makes you. But anything that comes up, we'll be there to support you with it. We can look at an alternative lender if your current lender decides not to lend. That's really the extreme case. Generally speaking, it's just confirming the valuation or adjusting it. Sometimes the valuation might come back at a higher value. Sometimes it might come back as a lower value. But we'll be there throughout to support you and to make any changes that need to be made. So once the valuation's taken place and the lender has had a chance to look at the report that the valuer sent back, all being well, they will go ahead and issue the offer. Now, if the valuation has showed a lower value or raised some concerns about the property, the lender may ask some questions, but your advisor will talk you through that process and try and answer those wherever possible. But if the valuations come back as expected, the lender will issue the offer, a copy will come out to you, a copy will come to us, and a copy will go to your solicitor, most importantly. Now, whichever solicitor you've instructed, they will get a copy of the offer from the lender's solicitor. So there are two solicitors involved, one working for you, one working for the lender. Now, the offer may have special conditions on it, so that may be about ownership of the property, about changes of title, if it's a separation. It may have a need to prove that there isn't a flood risk. But all of those questions will be posed by the lender's solicitor to your solicitor, and they may ask you questions around that. But ultimately, once they've answered the lender's questions, your solicitor will make an appointment to come to see you. So with a lifetime mortgage, the solicitor's appointment has to be face-to-face. They have to see you, identify you, and also at the end of the process, they have to be able to sign a certificate to say that they're satisfied that you've got the capacity, so the ability to understand the mortgage offer and the deed, the implications of the mortgage contract, and ultimately what you're letting yourself in for. And the other important point that they sign on the certificate is that they're comfortable that you're not being coerced in any way. So we've talked about vulnerability a little bit before. We have to be really careful dealing with older borrowers because there is always the potential of financial abuse. We look out for that as advisors, but the solicitors as an extra level of safeguard will also look out for that at the appointment that they see you at. Now, one of the important things about your solicitor's appointment, and it's best to know this right up front, is that the solicitor will want to see you on your own, or on your own as a couple. So if you have someone supporting you with the process, that's absolutely great, and they may want to be there for the solicitor's appointment, but the solicitor will want to see you on your own, so they may ask them to go out into the kitchen or leave the property. They will want to see you on your own to hear from you in your own words that you're happy to go ahead. So once the solicitor has been out to see you, they will send the necessary pack of documents off to the lender's solicitor, because the lender has their own solicitor as well. And assuming that everything is okay and the lender's solicitor doesn't raise any further questions, then they will set a date for completion. Okay. Now, completion is when the lender releases the money to the solicitors. The solicitors will pay off any outstanding mortgage, any debts that have been agreed to be paid out of the money. They will settle their own fees. Quite often they'll pay our fee if you're happy for them to do that. And then they will send the balance of money over to you to do with as you choose. Now, this will apply to the initial lump sum. So you may have taken just a straightforward lump sum, or you may have taken a lump sum with a drawdown. If you've taken the drawdown, then that money stays with the lender until you ask for it. Okay. So with the initial lump sum, it'll get paid into your bank. You can use that for whatever the objectives were that you talked to us about in the first place. If you've elected to set up a monthly payment, or you want to service the interest in some way or another, then that will have either been set up as a direct debit as part of your application process, or if it's a standing order one, generally speaking, there's a need for you to give the lender a call and to set that up with them. Your advisor will have gone through this with you in detail. If you're unsure, then please phone us, talk it through, and we'll give you the details to make that phone call and set up the regular monthly payment. Otherwise, it might be as simple as just phoning up with your debit card when you choose to make a payment and making a payment that way. If you've taken a drawdown facility, that stays with the lender. You can request access to that money at any time. Different lenders have different minimum amounts that you must take from your drawdown, but we'll have talked to you about that in the process of setting it up. So you'll be aware of that before the money actually completes in your account. Now, when you ask for money from your drawdown, you speak to the lender directly. There's no need for any further underwriting. There's no need for any solicitors to be involved. The lender will then send you a confirmation of what you've asked for. They'll confirm the rate that money will be available at, and they will ask you to sign that letter if you want to, and send it back, and they'll release the money in due course. Now, if you have any concerns about this at any point, please give us a call before you take the money. We'll talk it through with you, answer any questions that you may have, and speak to the lender on your behalf if you need to. The process of support and advice doesn't stop at completion. We're still here. After 2 years, we will call you and we'll just check that everything's going okay, that the mortgage is still fit for your purpose, and we will have that ongoing contact with you for as long as you have the mortgage. So if your circumstances change, you know there's going to be someone on the phone. You can always call us in the meantime. We're not going to leave you alone with this. Okay, it's a lifetime mortgage. It requires a lifetime of support.